Hey guys, today I chat to Greg Foss. Check it out. Hi guys, today on the show I've got a very special guest. Very happy to welcome Greg Foss. Now, Greg's been a trader, he's been in the markets for 30 plus years. You name it, he's seen it. I mean, I'll let him do a better intro than myself. All I'm going to say is, Greg, welcome to the show. Really good to have you here.
It's such a pleasure. Thanks for having me and inviting me.
How's the weather in Canada this time of year?
So I learned yesterday I was on another flip side, another South African podcast. So I've done two prior to this one. So this is my third one, but yesterday was the second one, and today back to back. So you don't realize this living in the northern hemisphere that our summer's your winter, obviously.
Yeah.
But I joked yesterday that my next door neighbor in Canada is actually South African. And good man. And his buddies coming over to our place on Saturday night for a get together on our porch in nice hot Canadian weather. Now, I'm not sure what that means by South African standards, but it's nice and warm up in Canada. I'm not sure if it's warm as it gets in South Africa, but yeah, we're flip side. We're Canada. Oh, sorry, we're summer here.
Yeah. Now it's a bit cold here, but and that's why
So
we
funny
listen.
thing, when you say cold, what would cold be by your
Now,
standards?
cold is when it goes just below 0 Celsius.
Oh, okay. That's not bad. That's
Yeah,
okay.
we had
So that's
-2.
so yeah. It's when in Canada when we say it gets cold, it's when it goes below like minus 18
Yeah.
degrees Celsius. That's 0 degrees Fahrenheit.
I've
So
got that in a thing called a freezer. I've got a freezer.
okay.
Well,
Oh
actually, the
boy.
freezer doesn't even get that much, right? So, Greg,
That's right.
today we're just going to jump right into it, right? We'll get to the markets a bit later. But
Sure.
I've been following you. You're a Bitcoin bull. Why will Bitcoin become a global reserve currency? Why do you see this happening?
Well, I love the way you jump right into it. So let's take a few steps to get to that point. Firstly, I need to define the difference the way I see it between a global reserve currency and a global reserve asset. Okay. Now, I believe it's possible Bitcoin will become a reserve currency as well, but let's focus on the reserve asset side if that's okay. And a reserve asset is something like a US Treasury bond that would be held by other central banks. And why could Bitcoin become a reserve asset in in that vein? Well, very simply, it's not quite simple, but I need to uh, give a little background here. I'm an engineer by training. I'm 58 years old. I was schooled at a university in Montreal called McGill University in engineering. It was a great experience. This was back in 1986 when I graduated, and I realized I didn't want to become an engineer or a full-time working engineer. I had applied to a school in the U.S. To earn a business degree afterwards, and I did. And I've never lost my engineering roots, but let's be honest, for the last 30 years, I've traded risk in a financial, we'll call it financial engineering sort of concept. So I've never lost my engineering roots. The first rule of thermodynamics is that conservation of energy, principle of conservation of energy. And I have to go right out on the back of a Michael Saylor introduction or concept that Bitcoin is digital energy. Okay. A lot of people like to think of it as digital gold. I prefer to think of it as digital energy. Very simply, you turn natural resource energy, generate electricity, and mine Bitcoin. So if Bitcoin is digital energy, and up until now, nations that export their valuable natural resource energy for payment in US dollar fiat might be looking at themselves saying, why am I selling valuable resource energy for a debasing fiat currency with 100% certain guaranteed to debase over time? Wouldn't it make more sense if I received my payment in a an asset like Bitcoin. So I make the prediction that within the next 10 years, I believe there will be nations that ask to be paid in Bitcoin. Now, we've seen this happen in the form of other energy exporting nations asking to be paid in euro dollars versus US dollars, but nobody has yet made the leap to be paid in Bitcoin. But it makes sense to me as an engineer that you would want to receive digital energy for your natural resource energy. And I believe there will be certain countries that make that leap. Uh, this will certainly challenge the petrodollar system. That being said, I believe that the laws of conservation of energy overwhelm any paper fiat petrodollar system. If that happens, and I'm going to say when that happens, I believe Bitcoin will supplant the US dollar as reserve asset. Okay. It will supplant US dollar fiat contracts, i.e., bonds or treasuries, as the global reserve asset, very
Right,
simply.
right. So that's the what, and you said it's a question of if, a question of when, not if. Now I
In
want to
my
ask.
opinion.
Now I'd like to ask you the how. The US is very protective of the dollar. Let's just be very honest here, right? I had Paul Craig Roberts on about 2 or 3 weeks ago, and we were talking about how protective the US is, because there's so many benefits to having the dollar as a reserve currency. Even if
Right.
Bitcoin is going to become an asset, as you say, what's the path it will take? How do you see this playing out, given the government's attacking it, even the banks? How's it going to
Yeah.
look over the next 5 to 10 years?
Dang, I mean, look, that's a big question. I would say I'm no geopolitical analyst by any means. What I do know is we've had Chavez in Venezuela. We had Saddam Hussein in Iraq that announced he wanted to get paid in euro dollars, right? In oil. We've had other countries that have tried to go off the petrodollar system, and there's been some let's say there's been some interesting responses to that, and then under the guise of, oh well, we have to search for. Listen, I'm a huge fan of the United States and their ability to police
Yeah,
the world, okay, because
yeah,
it does supply more good than bad, in my opinion. Look, a Russia that decides to accept Bitcoin as not as payment for their energy, hey, that may be different than Venezuela and Iraq, okay?
yeah.
And let's be honest about this, okay? The US could completely flip this around as well if they actually embraced Bitcoin. We just had an exodus out of China of all the Bitcoin miners. And the US, if they were not asleep at the wheel, should be absolutely embracing this opportunity to have a reserve asset and a reserve currency. Okay. The US dollar could still be the reserve currency, but Bitcoin could be the reserve asset, similar to having a savings account, which is your Bitcoin account, and your checking account, which is your fiat currency account. Okay. I don't know how that's a big question. And I'll just say, look, there's
Yeah.
been certainly some challenges to it. I'm not going to be stupid about this, but how about if Canada did it? Hey, just imagine if Canada did it. Do you think the US would invade Canada and said they were looking for, you got to be careful what I say here, looking for
Yeah.
weapons of mass destruction? Um, I don't know. I just don't know. But I'm not going to say it's a 0% probability. Okay. There is a greater than zero probability, and in my opinion, quite a high probability that an energy exporting nation will be looking to get paid in Bitcoin for theirs. And as this always happens, there's one domino, there's another domino. And
Yeah.
maybe people say, hey, I don't need to get all of it, but how about if I actually embrace Bitcoin as a reserve asset on my balance sheet? So it happens in various different ways. Is that somewhat, I'm protecting myself. I don't want the
No, no,
CIA coming
sure,
down saying,
absolutely.
I'm like, because look, I'm a patriot. I love the United States. I went there. I have plenty of friends there. As an aside, I don't mention this that often, but my roommate from Cornell University was actually killed in 9/11. Okay. And
Wow.
so I understand the necessity to protect the nation against, bad actors.
Yeah.
I can never tell you how heartbroken I was. And so I am not dissing the United States military capability. It is an absolute necessity, but I'm also concerned about this use of fiat money that is guaranteed to debase.
Right. And apologies for putting you in the hot seat. It'll get easier now that the difficult questions are out of the way,
No, it's
right?
not the hot seat. Come on, you have. And by the way, I need to answer these questions because people need to ask these questions, right?
Yeah.
You cannot pretend they don't exist. They, much like the elephant in the room on various other things, that's an elephant in the room on that basis. But it'll happen. Why? Because I'm an engineer at heart and I believe in the laws of thermodynamics.
Right, right. So let's move on then. I don't normally like to talk price, but you've done a few videos where you had this 2 million figure. So let's talk about that. Why will Bitcoin get to $2 million? Why that number?
Okay, so you're crushing it on these questions here. Maybe I should have gone over some of the questions as we joked at the beginning. No, okay, yes, that's a number. It is a number that I cannot give you 100% certainty that it'll get to that number, but nor can I tell you it's not within the realm of possibility. So how do I get to that number? Very simply, okay? Again, I'm a math guy, so I like to look at a situation and try and play what if scenarios, and then we'll put a probability on it. Okay. So I start with total global financial assets in the world today is US dollar 900 trillion. Okay. That includes real estate. That includes all debt. It includes all equity. It includes gold, fine art, all currencies. Total US $900 trillion. Now, we already talked about the potential for Bitcoin to become a reserve asset in some form. If that happens, and it doesn't even have to happen, but if that happens, do you think there's a chance that Bitcoin would take 5% of that $900 trillion asset pool?
Yeah.
Dang, I think 5% is certainly reasonable. Well, what's 5% of 900 trillion is 45 trillion, right? And then 45 trillion divided by 21 million. And you do your math, and that's over $2 million of Bitcoin. So then we start putting probabilities on that. And that's when I play the probability game and I say, okay, look, everyone says Bitcoin's a Ponzi that has not done any homework. But I'll say, okay, let's assume you're right with 90% certainty that you're right. I'll give you a chance. I'll give you 90% chance that Bitcoin's worth zero. Would you give me a 10% chance that Bitcoin goes to my price target? And most people, reasonable people, unless you're Peter Schiff, says, okay, yeah, that 90-10 makes some sense. And then you do a quick expected value calculation on that binary distribution. And let me be clear, right? It's not a two outcome probability distribution. The reality is it's a long tail right to the right, but it's some sort of continuous distribution. But for the math, 90% times zero is zero. 10% times 2 million is $200,000.
Yeah.
Where's Bitcoin trading today? Well, it's not that price. So what are you supposed to do if you believe that my scenario holds some water? You close your eyes. You say, I'll buy it. I don't care whether it's 30, 40, or 50. And I'm certainly not going to be stupid enough to wait for a pullback because I'm so smart I can time the market. So you're supposed to buy some on a continuous basis and get a weighting in your portfolio that reflects the asymmetric return opportunity that I just laid out. Yeah. And by the way, my probability that it gets to 90 and 10, my distribution on a binary basis is much higher than that. First of all, I don't think Bitcoin will ever go back to zero. And secondly, I actually think the possibility of it achieving a meaningful value measured in today's US dollar of over 1 million and 2 million and even higher than that is greater than 10%. But that's
Right.
just me. Don't listen to me. Do your own homework, or don't just say, okay, Foss is right off his rocker. I'm just gonna keep everything in this US dollar Ponzi, because that's what that is. That's the Ponzi, and that is guaranteed to debase.
Right. Now, based on the explanation you've just given, which was very nicely laid out, for the average Joe in any country in the world, this is why they call it trade of the century, right?
I call it the best asymmetric trade I have ever seen in 32 years of trading risk. Now, I've seen some good ones. And luckily enough, I was able to act on those good ones. But this is the best one.
Yeah.
But here's the problem. I never went out to the world and said the other ones were the best. And I just did it myself. This one, I'm telling you, it's the best one I've ever seen. But does that mean that it's going to occur? Again, you got to do your own homework. But in my opinion, based on everything I've seen for the last 32 years of managing risk, yes, it's the best trade I've ever seen.
Yeah. Awesome. So let's move on to a topic. I want to talk about deflation a little bit.
Okay.
And because when we talk about hard money, uh, some guys out there, some economists use the deflation argument to actually attack Bitcoin. Now, I was reading a book by Jeff Booth, and I think you
Oh
might
my
even,
God.
you know the guy, right?
Best book I've ever read. The
Yeah,
Jeff Booth's book, The Price of Tomorrow, is the best book. I'll go
yeah,
on record, and I've actually said this on the best book I've ever read. Luckily enough, Jeff is a Canadian, and I've spent some time with him. The thing I love about Jeff Booth's book, though, and I need to tell you guys this on the record, he wrote his book. Well, I shouldn't say this. I read his book after I had written my research paper on valuing Bitcoin. And the beautiful thing is, turns out we used a lot of the same statistics to arrive at our conclusions, but I had never read them, and he had no idea who Foss was. And now we're buddies. In fact, we're giving a speech in Bretton Woods, New Hampshire, together in the next 2 or 3 weeks. But the point is, we arrived at the same conclusion using the same available data from, amongst others, the Institute of International Finance, et cetera, et cetera. So I'm sorry to interrupt you, but yes, best book I've ever read. Yes, he addresses inflation. In his book, I think there's about maybe 2 or 3 pages on Bitcoin. That's it, right?
right,
Only 2 or 3 pages, but fantastic book focused on deflation due to technological innovation.
right. I would love to be at Bretton Woods. That sounds awesome. But there's a very elegant quote that I picked up from Jeff Booth, where he says, we're moving towards abundant money and scarce everything else. And what he would like to see, well, his theory to fix things is scarce money, which would lead probably to abundant everything else. And is that describing it properly?
So I took about 8 pages of notes from his book. I could show them to you. I'd have to take but let's assume that I'm not a liar, okay? Because I try and always tell the truth. So I took about 8 pages of notes. I don't remember that quote, and I'm upset that within that now I could go back to my notes and see that I actually wrote it. But here's the thing about Jeff, that's so beautiful. First of all, the man is intelligent, incredibly intelligent. Secondly, he's actually done stuff in his life. He's not an academic. He's actually started companies, and he's on boards, and he's managing risk, and in other words, he's not an academic that wrote this book, okay? An armchair quarterback like some of the other knuckleheads out there that are getting time on the social media and mainstream media on why Bitcoin won't work. But I can tell you that his view on deflation, yes, I accept it, versus other people's view on inflation, yes, I accept it. Doesn't matter. The outcome for Bitcoin is still the same. Okay. You cannot grow yourself out of the debt spiral in either outcome, inflationary or deflationary. Okay.
Yeah.
So, what does that mean? That fiat money is programmed to debase with 100% certainty in either direction, inflation or deflation, just because of math, pure, simple mathematics.
Yeah.
Hence, I don't worry whether it's going to be inflation or deflation. I just say I'll own Bitcoin in either case because that's what you need to hedge the certainty of fiat debasement. So, your question on abundance of one versus the other, I'm going to tell you that Jeff Booth would answer that question a lot better than I would. So, I'm not going to answer it. Is that fair? I just tell you, I don't care whether it's inflation or deflation that we're facing. I think that it's moot. It's a moot point. You need Bitcoin in either case.
Well, since you're friends with the guy, maybe you can hook me up with him, get him on the show, right?
100%. Listen, I bet you anything. When you send this out, I'll say, hey, Jeff Booth, and we did the same thing. We're not a tag team. I mean, we live on different, well, not quite different coasts, but he lives a 5-hour plane ride away from me. So it's not like we're buddy hanging out. Although I was on stage with him in Miami, and I'll just tell you, look, the guy should be Prime Minister of Canada. I would want nothing better. Why again? Because he's actually done stuff. Okay, our current Prime Minister in Canada has been a drama teacher, a ski board instructor, and a bouncer at a bar. Okay, now I'm not sure if that actually gives you all that much credentials to be Prime Minister of Canada. And he's a pretty boy. He just wants to get up there and be like G7 this and G7 that. The only thing that Trudeau, and I'm sorry to go on a political rant, but again, I have to call out these clowns. Trudeau was born into a family of politicians and then got elected for his affiliation, let's say affiliation, his bloodlines with his father. And that's politics, but I'll just tell you, I would much rather have the CEO of a company that managed risk and managed employment and considered all these things versus a drama teacher and a bouncer and a snowboard instructor. There's no disrespect to these other professions. Let's just say, though, that perhaps you shouldn't be managing a country. He did say, and I got to call him out on this, budgets will balance themselves. Okay, Trudeau, look, man, if you were the CEO of a company, you'd be fired on the spot and your stock would go to zero based on your intellectual stupidity. So that's enough on the Canadian political scene. Yes, Jeff Booth for Prime Minister, I would endorse it. I'm almost certain he won't take that job, but can we get him on your show? Yeah, we'll get him on your show. How about that?
Cool. Excellent. One more question on deflation, right? And I want to bring this back to your experience in the credit markets.
Yeah.
Perhaps. Now, the traditional economists have always told us, look, you need a bit of inflation. And what that also brings is velocity of money. They talk about the money moving around,
Yes.
You pay the barber buys groceries, the grocery store owner does something else with it, right? How do we, and I know Jeff would have the answer, but I want to hear, based on what you've seen, your 30 plus years, right? Why is that a weak argument against sound money?
Okay, so it probably goes to the crux of the problem within our financial system, which is the highly levered nature of our financial system. So every single global bank, when I started in 1988 in global banking, every single money center bank in New York, every single, with the exception of one, we only have 6 banks in Canada. 5 of the 6 of them were insolvent because of their loans that they had made to lesser developed countries around the world. Okay. Banks are insolvent on a mark to market basis regularly. That's because the way the banking system is capitalized, for every $100 of loans that you have outstanding, you only have about $4 to $6 of equity risk absorbing capital against that $100 exposure, which means the other 94 cents or 96 cents is depositors' money. Okay, that's incredibly huge leverage in the banking system, and it's generic around the world. What does it mean then? Well, a lot of banking is done on collateral basis, asset securing a loan. In an inflation environment, that's you have comfort in the value of your collateral.
Yeah.
In a deflationary environment, which I've never experienced, in it, yes, I experienced this when I started trading bonds in 1988. Interest rates, U.S. Treasury 10-year was double digit, and now it's 1.25, and everyone's like, "Oh my God!" Like it can't even go to 3. And you're right, it can't even go to 3 because it'll just explode the debt balloon. But there it was deflation to using the context that, well, if inflation at 14% in the 1980s came down to, what they reported as CPI, down to the level that could allow interest rates to decrease from double digits down to 1% in the 10-year. That's deflation in that context. Does it mean deflation that actually goes below, where assets now are losing value? I haven't lived that, but I'll tell you, they'll probably come up with some sort of measurement that will assure that they don't report true deflation, even if there is true deflation occurring. Okay. So the banking system needs inflation because collateral inflation allows a banking system that's 25 times levered, or I'll be less, 25 times levered. That's at 4% capital. Let's say it's 6%. Okay, it's 6%. Okay, so it's only 15 times levered. Get your head out of the sand, you clown academics that pretend that the banking system is not over levered. Okay.
Yeah. Yeah. So it's a concern, you saying, for the banks more than the man in the street. And that makes it
Well,
clear.
the man in the street is basically hostage to the banking system, let's be honest. And that's one of my biggest, problems with the fiat system, is that it's over levered. And every single time we enter a crisis, it's because leverage is being withdrawn from the system. People want their cash. They want to put cash in their mattress because they don't trust anything. And whenever that happens, you have a crisis. It goes around like clockwork. I started my career in 1988 with a crisis. It was called Latin American debt. Then in 1998, there was long-term capital management. Then in 2008, I was at a hedge fund working in the great financial crisis. And I thought, honestly, that the world was over then from a financial implosion. And then we never solved anything. The governments just absorbed the risk from the financial system onto the balance sheets of the various central banks around the world. We could have done something after the great financial crisis, but every time they tried to taper, the markets had a tantrum. So they chickened out, and then COVID hit. We hadn't paid down any of the money. COVID hit. We print more money, and now it is mathematically impossible to get out of this. Okay.
Yeah.
It is only math. I hate to say it. There's a little video that was made up with me. Some crazy Bitcoiner had put out, "It's only mathematics. It's only mathematics." It's quite funny. Okay. But it's not funny. Math is math. Mathematics is the base layer of language. Okay. It doesn't matter whether you speak Spanish or French or English or what's your native tongue over there, whatever South Africa is.
Something called English. No, I'm kidding.
No, well,
we have nine languages. I'm of Indian descent, so my language is called Tamil.
Okay, so here's the beautiful thing. Like, I know there's one language. The point is, everyone understands mathematics as their base layer, and then their second layer of language is whatever the tongue is, the native tongue that you learned. But it doesn't matter if you're Chinese or English. Mathematics is mathematics. That is the beauty of it. So math is the base layer of language. It's only mathematics. It's only mathematics. Okay. Very simple. Grade 11 math.
So let's continue on that theme now. The average guy, and this is the great thing about YouTube, podcasting, everything we have today. Average guy does some bit of research. He sees money printing and he can get it. He can get exactly what you're saying. But I want to dig a little bit deeper. With your experience in, let's say, the credit markets, the bond markets, looking at equities, what are some of the other signals that you see over the last few years that just doesn't sit well with you?
Okay. So let's just take your first observation that the guy can get it. Okay. The problem is they are also see their bank account, which has never been higher in their life, with this thing called money that they've always valued their entire life, and it's there because the government has donated it, if you will, or injected it into their bank accounts. They may see this money printer and understand intuitively what it means. But hey, when you get a bunch of money in your bank account, and that means you can go out and take your family out to a restaurant, sometimes, and I'm seeing this firsthand. Okay. So I grew up in Montreal. I currently live in Toronto, so 300-ish miles away from Montreal, but I'm still a partner in 8 restaurants, Irish pubs in Montreal. Our Luckily, when we reopened, I thought we were going to lose all 8 during the pandemic. Okay, so that wouldn't have been a great outcome. But we've reopened, and the one restaurant that is coming back the strongest, in fact, its sales this month are going to be almost 50% higher than the best month it's ever had in its history. And it happens to be in a neighborhood that is filled with, I would say, hard working, blue collar type neighborhood. And so what's happened? These guys have money in their banks accounts, and they're coming and they're spending it at my restaurant. And so that's real life. Okay. So sorry, now I forgot what your question was.
Well, so I'm saying we know that the money printing and inflation, the average guy can see it. And you saying, okay, but hang on, he sees it in his bank account. Maybe he doesn't care. But just digging a bit deeper, what are some signals in the credit market, bond market, the big signals that you're seeing?
Okay, look, so you always got to look to the credit markets for visibility as to when the system is starting to strain. Okay, why is that? Again, because the system is so levered. Okay, now credit is a prior claim to equity, which means in the event of a tantrum, equities have a second claim or are a subordinate claim on something that the credit markets are concerned about not being made whole. Dang, if the credit markets are worried about not being made whole, what do you think's happening to the equity markets that are a secondary claim? They're getting gassed. Okay. They're getting gassed, carved, and lots of the equity guys have no clue. Oh my God, why is this happening? Maybe because the bonds are worried about impairment and are shorting the equity to you knuckleheads that are buying it because you think that it's cheap. Well, usually the bondholders have much better information. Usually the bondholders are dominated by sophisticated financial institutions, not these Reddit equity investors that believe they've discovered how to invest because I read it on Reddit. Like, this is just such, juvenile and junior behavior. But when the government gives you a lot of money in your bank account, you can either go to my pubs or you can pretend you're an equity trader and trade AMC stock because you've discovered how to value AMC stock. Like these are some of the collateral damage that happens when the government prints a lot of money. But always look to the credit markets. Why? Because of leverage in the system. So things like the repo, it starts to gurgle. If the TED spread, which is the euro dollar versus treasury bill spread, it's a measure of risk in the banking system. If that spread is blowing out, you know that the banks are stressing, their funding is stressing. And if the bank's funding is stressing, liquidity starts getting drawn out of the system. And again, equities are the tail of the dog. The dog is credit. So always look to the credit market. So I don't even look for the equity markets. First of all, it's dominated by talking head idiots on TV that think they actually know stuff. And generally they don't even look to the first signs of credit contagion on a regular basis. They'll bring it up at times and they'll talk about this stuff, but then it's back to trading this stuff that trades on an exchange and the world can always see where the equity trades. They very rarely know how the bond market works because it's all over the counter. It's dominated by big silent institutions and Wall Street investment banks.
So, two questions on that. Firstly, are you saying that credit default is still absolutely a massive problem or thing that could happen?
Oh, listen, it happens all the time. No disrespect to your South African nation, but you guys just got downgraded to
Yeah.
junk bond status.
Yeah.
Okay, I was a junk bond trader my whole life. I have no problem with the word junk as long as you get paid the right return to take that risk. But as a country, you probably don't want to be viewed as a junk bond country because what does it make everything else in that country? There is a rating agency rule that no corporation that's based in a country can have a rating that's higher than the country. So de facto, that means every single company in South Africa is junk. Hey, that ain't a great thing because I'm sure there's lots of companies in South Africa that aren't truly junk. But when the country is, it's called a ceiling that you can place on. So then the rating agency will probably go into the CEO of that company and say, yeah, okay, so we're going to pretend you're not 100% based in South Africa now. So then we're going to move this rating ceiling on you, okay? It's just such garbage and crap that happens in the rating agency world. It's only a subjective opinion, but look, it carries water. And South Africa's a G20 nation that has some trouble. I hate what's happening with your citizenry. We don't even have to talk about that. The reality is it's a country that's exceeding its leverage guidelines. Now, Canada isn't far away, but Canada still has a AAA credit rating. We're one notch higher than the United States. United States is AA plus in the eyes of S&P, but that's also joking because not even joking. It is a joke because in the credit default swap market, that's the insurance market against nation default, sovereign nation default. Canada trades as a far higher risk premium than the United States does. So on the one hand, you always got to be careful about these rating agencies. They do carry weight, but the reality is always look to the market for risk pricing. Don't assume that a subjective opinion of a credit rating agency is that valuable.
Right. That's very interesting. So I learned something there. I didn't realize that all companies within a border of a country inherit junk status. I mean, that has massive implications. But in the next,
no. Look, they might have said, "Oh gosh, now I don't want to offend all these companies," because you know why? Because it's the companies that pay for the credit rating too, right? So there's a little bit of give and take. But yes, absolutely, there was and still is a rule that the rating level of the country is the ceiling for what a company based that does 100% of their business in South Africa, can attain.
Well, the next part of my question comes to the equities market. Now, as you said, everyone is an expert nowadays. Joe Schmo is on Reddit, and they think we know everything. Yeah, I've been there as well. I won't tell you what I bought. I won't tell you how much I lost. But I heard an interesting comment from you on another podcast, something along the lines of, the only real returns in the equity market has been dividends. The rise in equity values is mostly due to currency debasement. Now, this blew my mind.
So I believe that because if you measure equities in gold, that's exactly what it shows. All right. So the equity performance is measured in gold is only dividend returns. So it's the same thing about a house, right? Like I can just take it to something that even more people can relate to. Oh man, they're all excited. They're making so much money on their house. You're not. It's only that the value of the unit of account is debasing so that it appears that your house is going up in value. Okay. Again, well, I hate to say it, it's only mathematics, but look, it's a question of what the unit of account is. What's the value of your house, or the value of equities is measured in this unit of account called Bitcoin? Oh my God, it's pathetic. It's like, it's straight down, right? But is your house really gone straight down? I would argue no. It's only a question of the unit of account that you choose. So be careful when you celebrate equity gains in something called a fiat currency, because really, again, it's just the debasement of your fiat currency. So I am a fan of hard assets. Hard assets include real estate. It includes certainly the hardest asset ever created, which is Bitcoin. But you can't have all your eggs in one basket, or I don't anyway. There's other people that do. I would just say you got to look at the hardness of your asset, the ability of it to maintain pricing power in the face of a debasing currency, etc. So, what is the worst investment you can have right now? It's bonds. So let's pick on something that I've traded for 30 years, and I can tell you it's over for bonds. Anybody who owns bonds of any type right now has failed their mathematics course. Why? Because bonds are just a fiat contract. If you think of it this way, okay, would you rather be a borrower or a lender in a scenario where there's a transaction or a contract that's drawn up at $100, and in 10 years you owe that $100 back, and you decide what the coupon is going to be for the risk profile of that counterparty. Let's assume it doesn't matter. It's not the risk profile. It's the $100 that you either borrow or lend at time zero versus the $100 that you anticipate you'll be repaid at time 10 years. Okay. I don't care what the risk profile is and what the proper interest rate is on that contract. The reality is the purchasing power of that $100 in 10 years versus the $100 today is going to be substantially less. All right. It's a fiat contract programmed to debase because the fiat currency is 100% certain to debase. Would you rather be, then I'm going to throw it back to you, would you rather be the lender or the borrower today?
I wouldn't want
that $100.
I wouldn't want the money back after 10 years because it's worth a fraction.
65%, maybe, if you're lucky. Okay, here's the thing. So then again, Tavesh, what would you rather be? I'd rather be the borrower. Ship it in, baby. So who's the smartest borrower in the markets right now? His name happens to be Michael Saylor. He happens to run a company who understands engineering because he's a rocket scientist. Mathematics is the only language he needs to know. He understands financial markets, not even as an expert. He just looks at saying, someone's going to lend me money at 6.125% on a fixed contract, and I get to put that money into something called Bitcoin. God darn, ship it in, baby. I'm doing that trade. Well, every single person out there should be taking that lesson and applying it on a personal basis, where I'm not saying borrow and lever up your life to own Bitcoin, but don't pay down your student loan before you own some Bitcoin. Don't pay down your mortgage before you own some Bitcoin. Now, if you're going to default on your mortgage, don't do that either. Make sure that you can absorb both. But God darn it, these interest rates right now are absolutely the result of central bank shenanigans. So you're supposed to take advantage of this right now. And the way you take advantage of it is you borrow the money.
What happens when interest rates start going up to Bitcoin?
What happens? They will never go up. Okay, let's be clear about this.
Really?
Interest rates will never go up because the governments have to suppress them because they understand the debt spiral. And I'm going to say debt, D-E-B-T, but it's going to turn into a death, D-E-A-T-H spiral as well. And the first countries to go will be, unfortunately, countries like Argentina, well, before we even get to the G20s, of which Argentina and South Africa are part of, and Canada, G7, but if you're G7, you're G20. We'll talk about these other 160 fiat currencies that are like, okay, see ya, over, done, you're baked, it's over. So the contagion starts. We've seen it. I saw it in 1988 with the lesser developed countries. Like, look, it was primarily Mexico and Brazil, but then Argentina, Philippines, Vietnam, all these other countries, they said, okay, look, yeah, we don't have to pay back. This is awesome. I don't have to pay back this debt because someone else has written the roadmap.
Yeah. Okay, we need to start wrapping up now, and I want to bring it back to Bitcoin. So I think you've given us some great arguments, and I hope the average guy looking at this gets to understand why hard money, sound money with a fixed supply has its value. Just on the Michael Saylor piece, what would you, if you had to advise institutions, what would you say to them looking at all of this?
So the good thing is, I've sat in that chair. I made these decisions on behalf of people that entrusted me with billions of dollars. Like literally, I have managed billions of dollars. I'm not saying I'm something special because lots of people have sat in that chair. First of all, the markets humble you all the time. All right. So one thing you got to be certain of is you know that you'll never be right every single time. You need to hedge your positions. Why? Because nobody can possibly be 100% correct every single time. Okay. So you need to hedge your position. So what is Bitcoin? Well, if you believe Greg Foss, who thinks Bitcoin is the best asymmetric trade he's ever seen, versus Peter Schiff, who thinks it's a Ponzi, what if Peter Schiff is an idiot? I think he is. What if Foss is an idiot, but he happens to be right this time? I better get a little piece of Foss just in case it does go to $2 million or higher a Bitcoin. So I guess my answer is as simple as this. If you own 0 Bitcoin, you are actually taking as a percentage of your portfolio, if you own 0% of your portfolio in Bitcoin, you are taking immense risk compared to if you have an allocation to that asset class. What is that allocation? Yale University says it should be between 6 and 8% of your portfolio, assuming your portfolio is the traditional 60% equity, 40% bonds. And that 6 to 8% should come out of your bond allocation. Now, I've just told you that if you own bonds, you're as dumb as Peter Schiff is. A problem is, though, that a lot of these institutions actually have to own bonds. It's written in their investment mandate. Okay, it's written that I have to be so stupid that I can't even make my own decision. So I'm going to be so stupid that I can't make my own decision on my bond asset class, but I'm going to get some of this thing that could hedge my fixed income exposure that I'm mandated to hold.
Yeah, very interesting. Okay, and any closing thoughts? Just to wrap up, I think we'll leave it there. I know you have another appointment coming.
It's all good. I have 14 minutes or 13 minutes. How about this? You said something interesting to me. So you're Tamil?
Yeah.
So in my pubs in Montreal, a lot of the kitchen are Sri Lankans.
Really?
Yeah, and they cook the most amazing dishes that combine Irish food recipes with some of their spice, some of the Sri Lankan spices that you guys do some good stuff with. Now they won't tell us how to make those spices, and there's an intellectual property gap on that basis. But so we've got guys like Selvin and Tava and Subrahama is Tava. Subrahama, Vanian, and all these guys. I love these guys. Look, I'll just say this. The thing that I'm most passionate about Bitcoin is the ability for it to change lives of people that are less fortunate than I am. Okay. I'm privileged. Okay. Look, I'm white. I grew up in a family that could afford to send me to 2 of the highest education schools in North America. We had to borrow money to do it, but at least we had the ability to send me to those schools. So I took that knowledge that I gained and I went out into the world and I did okay. And I live in a nice neighborhood but here's what I know. Okay. I'm part of yes. Am I part of the 1%? Yeah, I guess I am. I don't always feel good about that legacy that I'm leaving for my future kids because my generation, the boomer generation, could be the most selfish generation that has ever inhabited the earth. Okay. We're so scared to take any risks or actually scared that the government's not going to protect us. We enforce policies that ensure that only the top guys continue to get their uh, protection and everyone else lower down the ladder gets absolutely trampled. That's what happens when you print money. Okay. It's the bottom part of the ladder. Even though these people, I'm going to say these people, these hardworking people think that money in their bank account is short term, uh, it is a short-term gain. They can go out
Yeah.
and they can have beers at the local pub. The reality is in the long term, it hurts them way more than it hurts me in the upper class. Why is that? Because the upper class has exposure to assets that will maintain their semblance of value versus these other guys that live day to day or month to month on the cash in their banking accounts and what they can earn at their hardworking jobs. The point is they don't have assets that will accrete with the debasing of the currency. Okay. What does it change? It changes the lives of people like my friends in Guatemala,
Yeah.
who are now boots on the ground in El Salvador, implementing the Bitcoin as legal tender in El Salvador. Okay, gosh, I have never met a group of young, motivated. They are all the ones I've met are all male, but it doesn't matter, men and women that are working so hard to improve their lot in life. Okay, Bitcoin in El Salvador is such a gutsy and, by the way, not as risky a move as all these academic armchair, and I'm going to have to say it, criminal, illogical, lying Steve Hanke's of the world, who are saying Steve Hanke may be the most conflicted, privileged boomer that I've ever seen in my life. Either he is outright lying or he truly is stupid. But he's a professor at a renowned university, neither of which the prior two characteristics are particularly flattering, right? He's
Well,
either stupid or a liar.
I'll tell you something interesting, right? I mean, I'm in Africa. The usage in places like Nigeria has just gone
Oh,
exponential.
yeah. Yeah.
People are doing international trade with Bitcoin. So there's
Yeah.
already this global macroeconomic thing. And I've said on my podcast for quite a while that it's the South Americas, it's the Africas who will
Yes.
lead because
Yes.
it's solving problems that they have that
Correct.
people sitting in these chairs cannot see.
They can probably see it. They just don't appreciate how absolutely horrible the situation is, right? Because they're privileged and they're endowed and look, I'm calling him out because I've seen him on podcasts and he just is so illogical and actually so despicable that he is continuing to promote this method of holding down and suppressing the billions of people in this world that don't even have a bank account. All right. So that's what Bitcoin solves. I think the number goes up, but I'm not even that concerned about that in terms of the ability of this to change the livelihood of so many people in the world. So I joke that Canadians should learn Spanish. Perhaps we should learn the language of, a lot of the Africa too, right? Because it ain't, unless we start understanding what this can do to change the world, we can keep our heads in the sand and pretend it isn't happening, but I promise you it is. I'm seeing it happening in real life.
Yeah.
Do I like it for a store of value personally? Of course I do. I want to help pass some of my preserved generational hard work and energy, which I worked hard in my life. I want to be able to pass that to my children in a store of value. But that's no different than people who trying to do it at the other end of the spectrum. And again, I need to be real careful about this. I worked hard to attain my privilege, and I want to try and give back in the form of an education and calling out these fraudsters.
Yeah.
I'll do that, but I don't want to be viewed as someone that just wants to hand these people the money. is once you hand them the money, you're actually making them worse. And that's what the government is thinking they're doing these citizens favors. They're not. You're actually making it worse. Okay.
Yeah.
So that's what Bitcoin is to me. And I really want that education process to spread. Excuse me.
Greg Foss, on that note, I think let's let's end there. This was a great discussion. I really enjoyed it. I learned a few things. I hope I gave you a view of the other side of the world. You know, we're literally on the other side of the world because I sometimes fly before COVID to Seattle. You know, Vancouver is close by, and that's a long flight. It's literally
a long flight, but there's so many great nations in the world that are Tonga, I'm thinking of, and I want to visit that nation someday. Yeah. I've talked to Lord, and it's what they're trying to do that takes guts. But I'll just say to this: the G7 nations in the world are the people that you do not need to listen to. You actually need to listen to your desire to change the outcome of your lives and your children's lives. And on that basis, Bitcoin can help achieve those goals. We are on the other side of the world, but we're joined in a community of like-minded thinkers, okay? And one final call out to an export from South Africa that now lives in Canada that's coming over to my house on Saturday night to share some beverages on my porch and dinner. His name is Mornay van Veck. Okay, Mornay is a transplanted South African that's going to have beers on my deck. And you guys are worse off for not having him. Canada's better off for not having him. I've tried orange pilling him. I think he owns a little Bitcoin, but I'm going to go even harder on him now, saying that I was on 2 South African podcasts.
Show him this video and the other one, and maybe we'll change his mind, right? Maybe we'll change his mind.
He's got kids. He's listened to the argument. He's an intelligent individual. I have a feeling that he owns more than and that's the thing. Just get off zero, people. Yeah. Get more than zero. Don't overthink this. This is the best trade I've ever seen. And if I'm wrong, okay, maybe you lose a little bit of your portfolio. I'm highly confident you won't. This is better to own some than not. Okay, thank you for having me, and go South Africa, and go Tamil, go Sri Lanka, go. Who are your other guys there? There's the Tamils, and then there's.
We've got so much diversity. We need another 10 minutes. We've got the Zulus and the Afrikaans guys.
Good. Well, anyway, look, this is a community, and it's been a pleasure talking to you and your listeners. Reach out to me if you need some questions. You can find me on Twitter. I did have that research paper that I'm happy to share with the world. Bitcoin is cheap. It's cheap insurance on central bank shenanigans. Don't ever pass up cheap insurance. Okay.
Yeah. Cool. Greg, hope you have a great day, and we might speak to you again.
I look forward to it.